Okay, so welcome everybody. I know there is a few people still joining in, so I'll do a brief introduction and then we'll proceed with Najib talking us a little bit about D&O insurance. So Najib is based in the Beazley, Miami office, and he's in charge of the specialty lines and cyber for Latin America. He has about 19 years of experience in the area of financial lines. He started his career in insurance in London, working with the broker Willis and then Aon, and then he came to the underwriting side with Munich Re in the UK, and then Excel Catlin in London. He from there was focusing primarily on Latin America and the Middle East. And prior to joining Beazley in 2017, Najib was the financial lines regional manager for Excel Catlin in Sao Paulo, Brazil. So, as a person who's been myself, and I counted a few days ago, I was counting how many international moves I've done in the last 20 years. It's about six already. So you're almost just behind me, and
Almost there. Yeah.
yes, they're gonna get there soon, I'm sure.
I have
So
four from the family.
it's well, I beat everybody, I think, because moving in a pandemic has been like 20 moves. It's been a
Awesome.
joy but a challenge at the same time. So for everybody who's listening, please feel free to ask any questions in the Q&A tool at any time. I will be trying to moderate the questions throughout the presentation, and I think that's it from my side. Najib, the floor is yours.
Excellent. Thank you very much, Danielle. Thank you, Lloyd, for organizing this event. So the agenda for the presentation, first of all, we're going to give an overview of the D&O product. So what does it cover, what it doesn't cover, who needs to buy it, and for what reasons. Then we're going to give some more concrete explanations about claims. What are the latest claims trends in the D&O market at the moment? We're going to give some claims examples, and we're going to explain why the claims are rising and what consequences this will have on the D&O market as a whole. And finally, we're going to do a practical exercise. We're going to do a basic rating exercise. So we will look at one fictional risk, and we look at the underwriting criteria and the elements that would determine our rating of that risk. And we will finish with some questions. So why buy D&O policies? So first of all, the main reason is corporate governance is increasing everywhere. So corporate governance basically what provides a framework for attaining a company's objectives. And with it comes a set of rule of regulation and additional obligations on the directors and officers. So this means increased D&O exposure. Directors and officers are held personally accountable for their actions or for their inactions. And very often they have to pay claims from their own pockets, especially when the company they work for refuses for any given reason to indemnify them. So now a lot of directors are hesitant to assume a role before actually making sure that they have a directors and officers insurance in place to protect them. We also have seen a heightened awareness of the existence of D&O policies by various stakeholders. I could give the example of some regulatory bodies in Latin America, such as La Contraloría in Colombia, which increasingly now comes after a D&O policy and considered as an asset of the company and a means for them to recoup their losses against this company. And also this happens in the private sector. Very often creditors, in the case of a bankruptcy, go after the D&O policy to recoup their losses. Another reason why buy insurance, D&O insurance, is globalization. So Latin American companies are increasingly doing business abroad. They're receiving investment from overseas. They're transacting funds overseas. So this means, they are exposed to claims in various jurisdictions, very often some very complex jurisdictions, such as the US one. And finally, we used to think that D&O claims are only for listed companies who list on stock exchanges. This is no longer the case. We are seeing huge increase of D&O claims in private companies as well. So what is D&O insurance? Very quickly, I think it offers liability for the individual directors in their managerial duties. So it is part of the company's risk management. It covers what we call the wrongful act of the directors, so their own personal liabilities, but also when the company chooses to reimburse them when it's defending a claim on their behalf. The coverage is for the current directors, it's also for the past directors, for the future directors, and it's also has like a indefinite cover for retired directors. It's a claims-made basis policy, so claims are only covered if they are mailed while the policy is in effect or within the agreed extended reporting period. And it does not tend to include anything fraudulent or criminal. Who can bring a claim? Well, basically anyone can bring a claim, but mainly the shareholders, could be the employees of the company, the government, regulatory bodies, which is very frequent in our region, customers, creditors, vendors, etc. Directors are the insured, directors and officers, obviously, but also an employee can be considered as an insured person if they are carrying out a senior management role, or in the case of if they are a co-defendant, or in case they are named in an employment practice liability claim. An outside director, so basically a director that was nominated by the company to sit on a board of an affiliate of an invested company, then will be covered under this policy. And a de facto director or a prospective director named in the case of an offerings memorandum. So at Beazley, we offer a various range of D&O products. The most common ones are the side A, B, C, and the side A, B ones. So side ABC basically is a comprehensive cover for the personal liability of the director, and also for the company's liability when it chooses to indemnify this director, and for the entity itself, the company itself, when it's faced with securities claims. The side AB is the same without the security claims aspect, so it's only for private companies. And then we have what we call the side A ground up. So the side A is a direct coverage of an organization's directors and officers when the actual entity is not legally required to indemnify them. And there is also a side A DIC, which is an excess side A policy that picks up the gaps in their traditional D&O policy, which sits underneath it. So it will drop down to fill the gaps when there is a refusal or any legal reason for the underlying primaries insured not to indemnify. So a lot of extensions in a D&O policy. I don't think we have time to go through all of them, but basically these are the main ones. Regulatory costs is basically in case there is an investigation by a regulatory body and they are called upon the directors, they want to interview the directors, then we cover the costs of this event. Internal investigation costs are the same, but internally, the same cost, but internally in case of an investigation. We cover data breach costs. So, for example, if there is an investigation related to a breach of any data protection policy, such as the LGPD in Brazil, environmental costs, obviously the extradition costs. We also cover the insolvency hearing costs and mitigation costs. So the costs are incurred by a company to try to mitigate risk and maybe reduce the amount of the claim. And finally, we cover reputation costs, so crisis management, the cost of hiring a public relation company was also covered as an extension under this policy. In terms of exclusions, so the main ones, as you can see, the number of exclusions is decreasing more and more. So the number one is bodily injury, property damage. So any claim related to bodily injury, so sickness, disease, death, or any damage to any tangible property. The prior claims, events, or circumstances, again, this is a claims-made policy. So any claim that was made before the current policy period or any prior and pending litigation will not be covered. Conduct, which you mentioned earlier, conduct is basically the deliberate criminal and dishonest act by an insured, or if they profit or make an advantage of something which they were not meant to make profit of. And finally, company versus insured in the USA. So any claims brought by the company against its own director in the United States. And professional services, sometimes we have it on and sometimes not. Basically, it's actually more relevant in an FI D&O, financial institutions D&O. Professional services are mainly to remove the E&O part in a D&O policy, so to avoid any kind of overlap. So it's basically excluding any services, any professional services rendered to a third party with a subject to a fee. So when your client wants to buy D&O policy, so what are the considerations they should take into account? So again, if they're listed or if they're private, they should consider whether to buy side A, side AB, side ABC. So again, the side A is relevant in cases where the corporate entity doesn't want to indemnify or cannot indemnify. So for example, it's a bankruptcy claim. The entity does not have the money to indemnify. So side A is relevant in this case. Cases like regulatory and criminal proceedings and investigations against insurers for acts of bad faith. So when there is fraud, the company does not have the ability to indemnify. And cases like derivative litigations. So the entity can be prohibited simply from indemnifying. So choosing what cover is particularly relevant. We will talk more about how the covers have adapted to the current market trends, especially now with the capacity hardening. Investigation cost is another very important issue, and also defense cost. So it's important for the company. What I would say is basically most of our claims right now in D&O are actually defense costs. So it's very rare that we indemnify. So the defense costs have been really spiraling. They've been increasing. And so it's very important for the company to understand what is covered under an investigation cost cover. ODL cover, I put that on because very often the policy does cover outside directors sitting in affiliates. And if there is a claim against this director, then it has the possibility of eroding the limits of your own policy, which means less cover will be provided for your own directors. So the company should be very careful when whether choosing or not to give ODL cover, because they can find themselves without any limits if there's a huge claim in an affiliate company. And finally, understand what is really indemnifiable and what is non-indemnifiable under a D&O policy is also very useful. So, enough theory. Let's talk a bit about some practical cases. So what are the D&O claims? What are the most common claims example? So the one we see the most often is what we call a breach of fiduciary duty. So this occurs when a person, a director, places their own interest ahead of the interest of the company or the stakeholder they are working for. This is, I would say this is one of the main reasons why we see claims in the D&O. Another one is misrepresentation of the company's assets. So through accounting manipulations, inflating the revenues, inflating, maybe downsizing the debt, downplaying the debt. So, any account manipulation which makes the company look, make it look, have a different image than what it actually has, could also bring a lot of D&O claims. Failure to comply with workplace laws, employment practice liabilities. So these are cases of discrimination, things like a gender gap, sexual harassment. It's important to note that most of our policies only cover the directors, do not cover the entities for employment practice liabilities. Misuse of public funds. Again, we are seeing a lot of regulatory bodies now asking the companies, especially like the directors of public companies, to be held accountable for any misrepresentation, any misuse of public funds. But very often this goes really far. So it's not, they don't have to prove the misuse. All they have to prove is a discrepancy between the budget that was allocated and the use of such a budget to bring a claim against the directors of the public entity. And this is, again, as you probably heard, on the rise in various legislations in Latin America. We've seen a lot of claims related to insolvencies. As we saw it before, the creditor would like to recoup their losses when the company becomes insolvent, so they go after the D&O policy. Lack of corporate governance, theft of intellectual property, and misrepresentation on an offering memorandum. So when the company is about to list in a stock exchange, they tend to present a prospectus, a memorandum, whereby they state their risk factors and they give projections of their income figures. So obviously, when there is a listing and the share does not perform as well as was predicted, then the shareholders will try to find the reasons inside this memorandum. They will, claim maybe misrepresentation of figures. They will claim non-exposure of some risk factors, and they will bring a claim under a DNO. Claims considerations. So when your client is about to submit a claim, what are the considerations they have to take into account? So notification is very important. Check the notification terms in the policy. Sometimes they have to notify from the moment they are made aware of a claim. So understand exactly what is the definition of to be made aware. So who is made aware? Is it any person in the company? Is it a director? Is it a responsible person, a person with a certain role within the company? Consent. So DNO insurance policies typically specify that the insurer's written consent is required for a policyholder to settle a claim. What we have seen very often is some policyholders go and settle the claim without seeking consent from insurers, which can cause a lot of unpleasant surprises. What is declared in the proposal form is very important. The information can be used against the client. And also various other aspects, such as the exclusions, the actual cover, who is really insured under the policy, what is the retroactive cover that is listed under the policy, and the choice of law and jurisdiction. So is it, for example, sometimes some of the policies limit the choice of law to the local country, say Brazil or Argentina, but the claim is brought by a US investor. So the client could be in for a bad surprise because the claim may not be covered. So this is what we've been talking about lately, is the increase of the number of securities class actions in the US. So over the past 10 years, as you can see, the number of SCAs, how they call them, securities class actions, have more than doubled. We don't have the figure for 2020 yet, but we know for a fact that number of settlements in 2020 has totaled $3.26 billion. So that is a 3% increase on the 2019 figure. So, you would think that with the pandemic, the whole legal framework, the whole litigation environment will calm down a little bit, will soften, but actually it wasn't the case. We still are seeing a lot of securities class actions, particularly in the US. So to give you an idea, in 2020, the 4 largest settlements taken collectively represented 1.8 billion. So half of the 3.2, actually a bit more than half of the 3.2 figure total mentioned earlier. So the number is on the rise. So in terms of impact on the international companies, so it is, there's 17% of the US listed companies that are foreign, that are, domiciled abroad, that are, most of them, a lot of them are Latin American companies. However, 26% of the actions of the claims come from these foreign filers. So there is an imbalance between the number of foreign filers and the number of claims coming from those foreign filers. So it is believed that maybe the SEC tends to go more often after foreign filers than after US domiciled risks. So, you will see, so the number of listed companies is lower than actually the number of securities companies concerning these listed companies. So in terms of settlements, so these are some of the largest settlements of foreign listers in the SEC. So you'll note that some really huge ones, like the one of Fortis AGS is 1.5 billion in 2018. Royal Bank of Scotland Group in the UK, 1 billion. Their first Latin American company in there is not in the top 25, it's just underneath it, and the settlement is about 32 million. That being said, there are a lot of cases still in the pipeline which haven't been settled, which might breach this figure. So as you can see, there are large settlements. So, when we're talking about DNO claims in the US, we are talking about quite important amounts. So navigating the disruption in the DNO market. So what's happening at the moment for us, DNO insurers and reinsurers? The impacts on DNO claims, it's increasing number of reserves, increasing number of defense costs, litigation pipeline. So this is affecting our underwriting results. So what are we doing? I mean, not us personally, but what is the market doing as a reaction? A lot of insurers are pulling completely altogether. A lot of insurers have pulled out from Latin America. A lot of them are, more than doubling, trebling, quadrupling the premiums. It's causing a huge strain on the brokers who have to deliver a difficult message to the client and explain why the premium have gone up so much. And also insured, as a result of the increase in premium and the reduction in capacity, they're having to rethink cover. So sometimes, they need the Side C cover, but they choose not to buy it in order to reduce their spending budget on D&O insurance. Sometimes they're only choosing to buy Side A cover, again, to keep that premium low. The trends to watch. So, it is believed that there are still some worrying trends affecting the D&O market. So cyber. So now we are seeing a lot of cyber security related issues representing D&O risks. We saw the case of SolarWinds, which is a famous network infrastructure management company in the US, whose breach software has caused a lot of hackings among US government entities. So as a result, they are now facing a class actions. The directors are facing class actions for misrepresentation of their cybersecurity and for failure to prevent this type of breach. So this is one of the cases, that can set a precedent. Cyan is a Supreme Court decision which took place 2 years ago, basically authorizing state courts in the US to bring the claims at the same time as federal courts. Whereas before, one claim brought in the federal court was enough. Now all 50 US states can bring claims for the same event. So this has as a consequence, this will accumulate the defense cost for the insurers, reinsurers. So pandemic is another one, obviously, with COVID and the lockdowns and the economic crisis that are ensuing, a lot of companies face risk of bankruptcies. So we have to be very careful in the underwriting of the companies. We have to take into account some financial criteria, such as their cash reserves, the strengths of the capital, the ability to sustain a long period of downturn. And also what we're seeing in the pandemic is it's affecting a lot of pharmaceutical and life science companies who are seeing an increase in the securities class actions for these entities for their failure to abide by the development of the vaccine schedule. So that has caused, I think we had 7 securities class actions last year relating to companies developing vaccine. So drivers behind the hardening markets. So, again, it's changing claims environment, new claims trends. The rates that have been charged traditionally, historically, have been very low. I still remember the times where we only talked about a 1 per mil rate on any private D&O business in Latin America. There's a lot of under-reserving by the markets, which has now come to the surface. Poor communication between claims and underwriters. This is partially the fault of underwriters. They underwrite the risk, but they don't know the claims that are related to that risk. And also, like, there's a lot of one-size-fits-all approach. So basically, the recent trend before the crisis of basically automating all D&O insurance and just providing one rate for any type of risk, regardless of its profile. So I'm gonna squeeze through that. That's easy reactions. So let's do something a bit more fun, just instead of talking about increase of claims. So these are practical cases. So which of these questionable charges was invoiced to Beazley by a defense counsel in a case of a D&O claim? And so this is a quiz, but obviously because it's very difficult to interact, I will give you the answer. So it's all of the above. Let me go back to that. So a helicopter service was for a crisis management consultant. A cucumber facial was submitted by a defense counsel on a pension claim. There was overtime air conditioning submitted on a D&O class actions case. And there was a manicure and pedicure on an international D&O claim. And these are actually genuine claims submitted to Beazley.
Najib, sorry, before you move to the next one, can I ask you how many of those did you actually pay? Because some of them seem ridiculous to be paid.
No, they are actually quite ridiculous. I don't think we paid any of those.
Good,
this is just The next one is, to give you an idea about how high can defense costs run is, so what is the current highest figure we have seen for a defense counsel bill on a motion to dismiss claim? So 750, 5.6 million, 8 million, and 23 million. And the correct answer is 23 million. So a defense counsel in the US incurred $23 million in spending over a period of 5 months only on a securities class action for an international company. And this is a reality. What are the current hourly rates for defense counsel in the US? So the answer for this is C, 1,750. So this is the average hourly rate that a partner is charging in a defense counsel in the US. However, if it's a junior associate, then they would charge a bit less. They still charge 1,200, which is still, for me, a prohibitive rate. But this will give you an idea about how expensive could be the defense costs in the case of a US claim.
I think what that tells me is that I should have chosen better my career as a lawyer.
Yeah, that's correct. So before we move on to the next section, which is going to be like a practical case of underwriting, I wanted to know if anyone has a question of what we have covered so far.
I do not see any questions in the Q&A, but if anybody has a question and they want to if you want to raise your hands, I can probably unmute you and allow for questions to be posed directly. Or if you want to type it in the Q&A, we can read them out loud. I don't see any questions yet. Oh, right. Sorry, there is somebody who's raising their hand. So 1 second. Let me just. Arturo, I think you should be able to. Unmute now. Arturo, sorry, you need to unmute yourself, but I already allowed you to do that if you want to speak.
There's a question from Juan Guzman. What is Cyan again? Maybe I'll answer that whilst Arturo.
Sure.
So Cyan is actually a company that was sued in the United States, a securities class action, and the case went to the Supreme Court. It was sued in the federal courts, so in the courts of the United States, the federal courts of the United States. But then I think it was the state of California and the state of New York who insisted on bringing their own separate lawsuit for the same case. So, the company and its lawyers argued that there is already one case open in the federal courts, so there is no reason for additional lawsuits to come in. And the case went to the Supreme Court, and the Supreme Court decided that it is possible for the state, for California and New York, to bring claims in addition to the federal courts. This is in a case of a securities class action, and it was more particularly in a case of an IPO, initial public offering for Cyan. So this has set a dangerous precedent for us, because now when we think we are faced only with the defense cost of the federal courts, we also have to face a potential defense cost from 50 United States courts. So the costs can accumulate. And as a result, we had to adapt our underwriting and make our deductible, our retention for the Site C cover in the case of US listing, in the case of US IPOs, very high, because the average settlement for these type of cases is believed to be around $29 million.
Oh. Najib, so Arturo Gutierrez has typed down his question. He's got two questions. The first one is, what about fines? Are they covered? And the second question is there a possibility that you can send an updated proposal form?
Yes. So Arturo, we can definitely send an updated proposal form. I think we do have one in Spanish. Fines are covered when they are insurable by the law of the country. So some fines, especially criminal fines, are impossible to cover. In that case, we will not cover. But if it's a civil or an administrative fine, then we will cover it.
Very good. Thank you so much. Okay, so Najib, I don't see any more questions. You want to continue with the?
So this is a fictional company called Propracell, sorry. They're based in London, in the UK, and they're a biopharma company. So they specialize in patenting cancer drugs. They have been established in 2009, and since 2009, and they are public. They're listed on the London Stock Exchange and on the Nasdaq. So this is the first thing we look at when we underwrite a DNO is, are they public? Are they private? So in this case, they are public. And if they are public, what's their market capitalization? And what's the current price of their share? And how is it evolving, in the 52-week range history? So in this case, we note that the share is not doing so well. It's at its lowest in its 52-week range. The market cap is at 2 billion pounds. So it has a good pipeline of products, but their expected blockbuster drug just failed phase 3 of development. So they are in a kind of a uncertain period at the moment. But despite that, this company is targeting 20% growth over the next 12 months because they have other drugs in testing phase. They have 350 million in assets, 100 million debt, 26 million in revenues. In terms of corporate news, they just have appointed a new CEO and a new CFO. So, okay, what other criteria do we look into? In terms of ownership, so apart from the market cap and the share price, we look at how much free float the company has. So how much of its shares are actually listed on any stock exchange. In this case, it's 60% free float, but the founding member, the owner, still owns 40%. When it's listed on any US stock exchange, we need to know what ADR level it is. So it says ADR level 1, 2, or 3, depending on the level of disclosure they have to give and the amount of money they can raise. And there's also a direct listing in the US. In this case, this is an ADR level 3 company with 20% of its shares listed in the US. What we note also is there's been a 37.5% stock drop down following the news of the fact that the cancer drug has failed. So this is also important news. We also look at the locations. So it has a worldwide presence, but if we delve down a bit deeper, we know that they have presence in very litigious countries, such as the United States, Australia, and countries which may lack some transparency rules, such as Russia. So biopharma company, 200 employees. Employee number is not really relevant for DNO, but it's always good to know. Who are they? So they specialize in cancer drugs, and 50% of the revenue is derived from the United States. Looking down deeper into their activities, so we obviously want to query the fact that their main, star cancer drug has failed. So what other alternatives they have? So we ask about that. So they have planned growth, which is organic. So they're not planning any merger or an acquisition. And they sent us their pipeline of the other drugs they are developing and which phase they are in. So they have a drug for multiple sclerosis, which is in phase 2, and other emerging drugs. So we look more into their, financials. So out of 350 million assets, we look at the balance between assets and liabilities, how much current assets versus non-current assets, how much equity they have, how much capital, and we look at their cash level, particularly relevant in COVID times. The more cash they have, then the more comfort we have that they can sustain the downturn in the activities. So we look at the debt, so 100 million debt out of 350, so not very heavily indebted. Most of the debt is to mature in 2025, so it's not like they have any repayment immediately. So they're not going to default on their debt anytime soon. And we look at their revenues, but also at their profit. And we can see that in this case, they are still making profit. Finally, regarding the news that the CEO, CFO have been hired in the last 12 months. So we also asked a bit more information about that. And it turns out that this is nothing, extraordinary. It's just that the old ones have just retired. And so they have hired new CEOs. So it wasn't related to any conflict at the board or any conflict with the shareholders, which is always very important to know. So how do we rate this? So for a company which is a pharma company listed on the NASDAQ, we have a rater, we have a DNO rater at Beazley, and the basic price that it gives us is 5 million x a minimum of 5 million retention, $400,000 net. But then we have to take some adjustment factors into consideration. So we start from the base price and then we move on to the adjustment factors. So product phase. So we loaded the premium by 40% because they just failed the cancer drug. So, although they have a pipeline of other products, this might affect their results negatively. We didn't load corporate governance because we didn't see anything extraordinary. We did a small load for the board just because of the change of CEO or CFO, but only 5%. We were quite comfortable with their financials. We thought that they had enough cash and their business plan looks okay with many drugs in development stage. So we gave them a discount, of 15%. Regulatory, it's a pharma company, so it's always a good idea to load it because they're always under scrutiny, especially if they fail the trial phases. No M&As, nothing special about their terms and conditions. The policy is pretty standard. They don't have any claims or prior losses. We loaded for the territories because of US and Australia and Russia. And we also gave a load of 15% because their share price is really low. And so the share performance is not doing very well. So we always assume that when the share price is very low, then the shareholders are disgruntled, and therefore they are more likely to question the functioning of the company and to bring claims against the directors. And finally, the fact that their owner has still 40% of shares in the company justifies a 15% discount. So we start from a basic price of 400,000 net, and then with all the loadings and the discount, we come at a price of 580,000 net. So this just gives you a basic idea of the criteria we look into in terms of ownership, financials, activities, business plan, and what factors we take into account to rate the DNO risk. I hope that was useful. And this
Najib,
brings me...
we have a couple of questions right now already.
Okay.
And I know this was your last slide. So
yeah.
We have a question from Federico Spinelli who's asking what determines the base price, if you want to answer that one.
Okay. We have to ask my actuaries, Federico. It's basically, we have a rater, which we have worked on with the actuaries. It takes into account the total assets of the companies. It takes into account its market capitalization, if it's a listed company. And from the market capitalization, it takes into account the percentage of this market cap in United States stock exchanges. So if it's 100% listed in the New York Stock Exchange, it's much more riskier than if it's 100% listed on the Bovespa or on the Bogota Stock Exchange. So these are, I would say assets, market cap, the domicile, the region. So for example, some countries are definitely more exposed than others in terms of DNO risks. So our rater would load for some countries, and obviously the limits and the retentions. These are what brings you to the basic price. And then you adjust according to the factors specific to the risk that we saw before.
Thank you. So he's saying thank you. And Juan Guzman is asking us, which is your usual loading for Colombian territory?
Again, I mean, it's all different. It all varies of the type of Colombian entity we're talking about. At the moment, we are not looking at any state-owned Colombian entity. So it's not a question of loading. It's just a question that it's not within appetite for the obvious reasons. For private Colombian entities, if they don't have many government dealings, then it's just a normal loading. We don't actually do extra loadings for a private Colombian entity.
That's interesting. Thank you. And I know there was a bit of a hiccup in the Colombian regulation or the Colombian model regulation. Some of the authorities in Colombia,
Contraloría.
the Contraloría, Sebastián, thank you. The Contraloría was pushing for DNO claims to be adding up stacked on for several years.
Yes.
In order to reach out bigger settlements for the government. And
Yes.
I assume that's the reason why the risk for Colombia has been
Yeah.
sort of taken out of your preferred places. Is that correct?
Exactly. The main problem is that the Contraloria chose to ignore the commercial contract.
Yeah.
So there is a commercial agreement, there's a contract with sets of rules and extensions, exclusions, etc. There's also claims made policies, and they completely ignored that. So they refused the concept of claims made, and they accepted that the same claim can be brought under various policy periods. They rejected sublimits, they rejected exclusions, they deemed that they are abusive to the consumer. So, obviously the process is still in full discussion. There's been a lot of concessions made, but we're still not comfortable, enough to go back into writing state-owned Colombian entities.
That's very clear, Najib. Thank you so much. There's a couple more questions. One is, do you underwrite primary layers or excess layers only?
No, we do primary and excess layers. As long as the retention on the primary layer is good for us. So, for example, when it's a US exposed company and we are quoting a Site C, a securities claims cover, we have a minimum retention of $5 million. And as we saw earlier, when it's an IPO in the United States, because of the Cyan case, our minimum retention in the US is 30 million. So we're happy to write primaries if the retention is right.
Thank you. There is a few more questions. So
sure.
Thanks for the presentation. This is from Felipe Fernandez. I would like to understand how critical the image or reputation of a company counts in the underwriting of a D&O insurance.
That's a very good question, Felipe. I think, unfortunately, some companies suffer from a bad image, and once that image is there, it's very difficult to get rid of. So, companies choose to change their board, to improve their image, to hire, marketing, public relations officers to change their image, and yet they are still victim of this bad reputation. I would say, it doesn't really count that much in the underwriting. It counts more in the selection. So if once a company has a bad reputation, it's very difficult to find insurers or reinsurers interested in it. But the insurers, those who choose to bypass the reputation and take into account that the company may have changed, I don't think it will really affect their underwriting.
Thank you, Najib. So Diego Fuensalida is asking, according to your experience in a market like Chile, what is the main risk factor for a D&O policy? A class action has never been seen here. What will be the greatest risk factor then?
So in Chile, we have seen an increase of the frequency of claims, but they are all local claims. So they are from the local superintendency, from the local, SEC, I would say, bringing claims against listed companies in the local Chilean market. They're not very high in terms of severity, but there is a frequency issue. So I think this is the main issue for Chilean listed companies.
Thank you. And the last question we have now is, which of the adjustment factors can give a good discount for the insured? This is from Jose Carreño.
I'd say all of them, to be honest. All of them could give a discount. If the company's financials are great, if they have enough cash reserves, I would say that would be justify the bigger discount, because we are comfortable enough that the company is able to sustain periods of crisis. The other very important one is the regulatory exposure. So, if they're under scrutiny by regulatory bodies because of their activities, then obviously we'll load it. But if they're not, then we will give a good discount. But, I would say all of these criteria that we mentioned in the presentation could be worthy of a discount.
Very good. I think we have another question coming in somebody that wants to speak right now, but I'm not sure we're going to be able to listen. But
it's probably me, Daniel. I raised my hand.
Arturo Gutierrez was trying to talk as well, but he's saying here. Anyway, let's let's wait for a second. If he wants to speak, he should be able to unmute himself now if he wants to. But I think he asked a question already before. So
If if in the meantime, if I can just
sure,
ask
go ahead.
Najib,
Yeah.
Following the Johnson and Johnson COVID vaccine suspension,
Yes.
this type of situation, do you think this type of situation will end up in a DNO claim or affecting the policy?
It's difficult to tell, to be honest with you. I mean, the world is, especially the US legal framework, is controlled by very aggressive lawyers who are looking to make money. So you would think in the context of a pandemic, these companies would be more permissible to pharma companies because they're racing to develop a vaccine, to produce enough of it to save the world from a pandemic. So you would think that the lawyers will be less aggressive towards these companies. And yet we have seen a case of a class action presented against Pfizer in the US for delays in their vaccine testing phase. That was 3 or 4 months ago. So that's the one case I know of. I'm not sure yet if there's been anything presented against Johnson & Johnson. I'm not aware of it. But the fact that we have a precedent with Pfizer shows that there is a possibility that they might be affected, which, if you ask me, is crazy because, this is one aspect of humanity we should not really be litigious about.
Yeah, I agree. Thanks for that.
Thank you. And there is somebody else with a code that I can read out loud, but it's E107344. I don't know who this person is, but he's or she has raised their hand. So if you want to unmute yourself, I hope you can speak now. There's a hand raised from that person. I don't know if the feature of participants speaking, it's going to be allowed. I'm trying to allow them, but no.
I mean, if not, they can write the question.
Yep.
If they want to write it in Spanish, it's fine. Or Portuguese.
So how many languages, Najib? You have to tell me that.
Personally, I speak 5 languages.
5. That's beautiful.
Yeah.
Very good. It's very rich. Is one of those things that you get to the 3rd language and you're already in another ballpark. But it's a great thing to have. So we have one more question here, and it's from Mosquera,
Andrea.
and it says, how do political factors affect a quote, for example, in a public account in Argentina?
Yeah, they do, Andrea. They do. Unfortunately, again, we were talking about reputation before. Some countries currently suffer from a bad reputation, and so at the moment, we are trying to bypass the reputation issues, and we are trying to look at every risk on its own merit. We also take into account not just the political instability in the country, but also the fact how many kind of claims related to public entities have been brought in the country. And for example, countries like Argentina or maybe Mexico, despite the fact that they have been very volatile in terms of economy, this hasn't really translated in huge claims brought against the DNOs. So this is something we take into account as well. So we don't just reject a country just because the news about this country are bad.
Thank you. And we don't have any more questions at the moment, and I think we are already running out of time. So if anybody if you want to wait for just one more 2 seconds, but yeah. I think this is it. Najib, thank you so much for your time, and I think this has been extremely helpful for at least from my perspective. So thanks for your commitment in the time here.
No problem.
I think, there's people saying very interesting. So yeah, absolutely fine. Najib, thanks again, and I hope to see you in person soon.
Hopefully, we don't live that far.
Indeed. Thanks. Talk to you soon.
All right.